Good afternoon and welcome to BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. It's the 10th of April, and our guest today is Vishnu Varathan, Head of Economics and Strategy from Mizuho Bank, coming out to us from Singapore. Now, Vishnu, it's always great to have you on the show.
Thanks for having me, Brian. Good to be here with you on a Monday.
Now, Vishnu, over the weekend on Friday, we had the non-farm payroll numbers which came out. They were slightly below expectations. What's your view on this, and how has U.S. policy been impacted by these numbers?
That's a really good take on it. So whilst the numbers themselves may not have been, anything like a blockbuster number and look mellow enough, this is where the Easter Bunny gets pulled out of the head because really what you saw in the details was that unemployment fell lower. So it suggests that the job market is stronger, and that was despite participation rates rising. So zero point 0.1 percentage point uptick in participation rate, and unemployment still fell despite that, meaning it's fairly tight. Of course, wages earned was not accelerating at that hot pace that would be the Fed being exceptionally hawkish, but still, it was a very robust and a high rate of wage gains. So this is why you saw the dollar rebounding, which was led by U.S. Treasury yields rising at the particularly at the front end, at the long end as well. So markets are coming back to the fact that the job market is still somewhat strong. So the Fed may not back down by as much or as quickly as they think. So these things are being dynamically priced in after we spent most of the week, most of last week thinking of dovish excuses for the Fed to pivot.
Okay, then how is this then impacting us in Asia, especially from a policy perspective with central banks in the likes of the Monetary Authority of Singapore, South Korea, and Malaysia?
Yeah, I mean, to weave all of this in, we cannot exclude OPEC. So that's the famous, or rather the notorious element here. So OPEC has cut production. That means that you would get oil prices higher, and immediately we did see up to an 8% rise in oil prices. So it adds to several layers of fears here, and what it does eventually is it causes a huge fracture in the potential outcomes that increases the risks of a policy mistake. So working backwards, what this does is it means that US jobs, as evidenced, the validated data that came out says that the job market is still fairly hot, and so the Fed cannot back down. But the oil prices moving higher due to OPEC cuts suggests that OPEC is going to keep oil prices high enough so that inflation risks do not recede as quickly as we thought earlier. That's adding a layer of complexity because now we need to rethink how quickly central banks can back down. And what complicates this is oil is simultaneously, oil, you may say, has a bipolar disorder. It's simultaneously inflationary, it causes prices to move up, and central banks need to react to this shock, particularly given our runway. We've come from a place where they were slow to move on inflation. Inflation is now elevated and sticky. So we have lost the luxury to say, this is a one-off shock, let's look through this. So that's where it's inflationary. But it's ultimately deflationary because it erodes profits. It takes money out of the pocket, so consumers have less to spend on other items when we have imputed into oil and eventually food. So it has got this duality to it, which central bankers are painfully aware of, but they need to react to perhaps the inflation aspect of it, which then could deepen any particular downturn that follows due to policy tightening and just the overall suppression that comes from high oil prices. So this is what complicates the policy picture. It also raises the risks that there could be a policy misstep, in this case, particularly over tightening. And there's no source of comfort that we've just come from one episode of wobbles from the banking sector. So there's no guarantee that you won't be able to see that. And that what makes that tricky is you can't time it, and it's harder to identify it, unlike evolving inflation and growth risks, which critics will tell you only see it belatedly. By the time you see it, it's too late.
It's
Oh,
too
but
late.
you're seeing it. So putting everything together, right? I think we are in a place where markets are very, very hopeful. They're hopeful that the policy will be just nice, and the Fed has got some excuse to dial back, and the Fed will. But I think we are premature in thinking that the Fed is going to reverse its stance to a degree that's going to a degree enough to confidently spur a soft landing, and emerging unscathed from the multiple sources of pressures on the global economy. And if we notice today, we haven't even gone into geopolitics, where we probably need 3 more episodes for that.
Absolutely. Now, then, on that note, Vishnu, then, with the start of the week, what should we be looking out for as investors from a data point, from data that's coming out, or events of this week that could move markets?
Yes. So let me start. Let's go chronologically. Tomorrow we'll be looking at the Bank of Korea, as many markets return from Easter Monday, and that's when you'll realize whether the Bank of Korea is still very uncomfortable inflation risk and pushes the envelope a little further to lift to 3.75%. Although the consensus is for them to pause, but not yet be comfortably done with it. Even though they're concerned that they're in a down cycle and household debts are elevated, that's the degree of the inflation curveball that the BOK has to deal with. On Wednesday, we'll get two data sources, both out of the US, that I think markets will be paying a lot of attention to. One would be US CPI, that's to suggest to us where inflation is headed. On that, I think it would take a huge gyration one way or the other to move the Fed, because I think the Fed is giving this a wide berth. Even if it comes in slightly softer, they're not going to turn dovish. If it's slightly more, it's slightly hotter, they're not going to prematurely say let's do a 50 or 75 either. So they're just going to be on a holding pattern for the time being, at least. So the FOMC minutes is the other thing the markets will be looking out for. Backwardly looking at what were the details discussed at the March FOMC, particularly the thinking behind not raising the dot plot. That will be very important for them. They may be paying attention to the banking sector risks. Later in the week on Friday, you've got two. So MAS is in the morning. You'll get the MAS's position on this. The default consensus earlier was, it's time to hold after the unprecedented and the aggressive hiking in the last year. But increasingly, because and especially because of the oil shock component, that risk of oil shock, which the MAS in the past has previously responded to, I think there are growing bets that the MAS may do a recentering higher, or maybe not to prevailing levels halfway. So a calibrated recentering, if you must, that can give the Sing a bit of volatility. Later in the evening that day, US will be releasing consumer sentiments, and this is where markets could get hypersensitive to data as well. Any slump in sentiments, I'm sure they'll be very quick to project this as a dovish Fed catalyst, even if it isn't. So we just need to be aware of markets that are now going to be hypersensitive to US data, but a Fed that's going to be fairly steady.
Now, Vishnu, thank you very much for those detailed insights, especially for what we should be looking out at the end of this week.
My pleasure. Thanks for having me, Brian.
Now, we've been speaking to Vishnu Varathan, Head of Economics and Strategy at Mizuho Bank, on BizTech's Asian Midday Market Watch, powered by the Private Pension Administrator of Malaysia, or PPA, which is the central administrator for private retirement schemes. I'm Brian Fernandez. With this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It'll also be on our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.